Every stock has a volatility score that measures its risk compared to the broader market. What is beta in stock analysis? Category: Investing. Beta measures a stock's price sensitivity relative to a benchmark index, like the S&P 500, which has a baseline beta of 1.0. A beta of 1.5 implies the stock is 50% more volatile than the market, presenting higher potential risk and reward. A beta of 0.5 indicates a highly stable stock that moves half as much as the market, typical for utility companies. Subscribe to Educo Global for daily financial clarity. This specific bond market anomaly has often preceded major economic recessions. What is an inverted yield curve? Category: Macro. Normally, long-term bonds offer higher interest rates than short-term bonds due to the time risk of inflation. An inversion happens when short-term government bonds pay a higher yield than long-term ones. This shift indicates that investors have lower confidence in the near-term economic outlook. Save this video to track global market warning signs. A corporation can generate billions of dollars in sales and still be completely unprofitable. What is the difference between revenue and net profit? Category: Finance. Revenue, known as the top line, is the total amount of money brought in from sales before any deductions. Net profit, known as the bottom line, is the actual earnings left over after subtracting all operating expenses, taxes, and debts. High revenue indicates strong demand, while high net profit indicates efficient management. Follow Educo Global to learn how to read financial reports like a professional. To gauge the performance of the UK equity market, analysts look at this specific benchmark. What is the FTSE 100 index? Category: Markets. Popularly called the FTSE, it tracks the 100 largest companies listed on the London Stock Exchange by market capitalization. It represents roughly 80% of the UK's total public market value. The index is highly international, heavily weighted in sectors like financial services, commodities, and consumer staples. Share this video with someone interested in international investing. During severe economic downturns, central banks can utilize an unconventional monetary policy to stimulate the economy. What is quantitative easing? Category: Banking. Quantitative easing involves a central bank purchasing large quantities of government bonds or other financial assets. This action injects liquidity directly into the financial system, lowering long-term interest rates. By making borrowing cheaper, it encourages commercial banks to lend and businesses to invest. Subscribe for a deeper understanding of global economic policies. While lower prices might sound beneficial for consumers, persistent price drops can freeze economic growth. What is deflation and why do central banks actively avoid it? Category: Macro. Deflation is a sustained decrease in the general price level of goods and services, resulting in inflation dropping below 0%. When prices continuously fall, consumers delay purchases expecting goods to become even cheaper in the future. This reduction in spending forces businesses to lower production, cut wages, and lay off workers, triggering a deflationary spiral. Subscribe to Educo Global for daily economic clarity. Generating returns on your initial investment is efficient, but generating returns on your past returns is exponential. What is compound interest, and how does it accelerate wealth accumulation? Category: Finance. Compound interest is calculated on the initial principal balance plus all the accumulated interest from previous periods. Unlike simple interest, which remains fixed, compounding causes your investment balance to grow at an accelerating rate. The frequency of compounding, whether daily, monthly, or annually, matters, as more frequent intervals yield higher total returns. Follow Educo Global to master long-term wealth building. Investors often seek broad market exposure without the complexity of managing hundreds of individual stocks. What is an ETF and how does it function on public exchanges? Category: Markets. An exchange-traded fund, or ETF, is a pooled investment security that operates similarly to a mutual fund but tracks a specific index, sector, or commodity. Unlike traditional mutual funds, ETFs are listed on stock exchanges and trade throughout the day like regular shares. They typically offer lower expense ratios and greater tax efficiency compared to actively managed funds. Save this video to refine your long-term portfolio strategy. Lenders rely on a standardized mathematical calculation to determine your creditworthiness before approving a loan. What is a credit score and what primary factors influence it? Category: Banking. A credit score is a three-digit numerical representation of an individual's credit history, typically ranging from 300 to 850. The most common model, the FICO score, evaluates your financial reliability based on 5 key metrics. Your payment history accounts for 35% of the score, while your credit utilization, how much debt you owe relative to your limits, accounts for 30%. Drop a comment. Do you know what factors are lowering your credit score? While buying a stock limits your potential loss to 100%, shorting a stock exposes you to theoretically infinite losses. Why is short selling considered a high-risk financial strategy? Category: Investing. Short selling involves borrowing a stock, selling it immediately, and aiming to buy it back later at a lower price to pocket the difference. If the stock price rises instead of falling, the short seller must eventually buy the shares back at a higher price to return them. Because there is no upper limit on how high a stock price can climb, the potential losses are unlimited. Follow Aduco Global for institutional-grade risk analysis. Economists utilize a uniform fast food item to analyze whether international currencies are valued correctly against the US dollar. What is the Big Mac Index, and how does it apply the theory of purchasing power parity? Category: Macro. Created by The Economist magazine, the index evaluates currency exchange rates based on the cost of a McDonald's Big Mac worldwide. The core theory suggests that identical goods should cost the same across different countries when adjusted for exchange rates. If a Big Mac costs significantly less in local currency terms than it does in the United States, that currency is considered undervalued. Share this video with a friend who wants to understand global trade simply. To evaluate the financial strength of any public corporation, analysts prioritize 3 core documents. What are the 3 essential financial statements, and what do they track? Category: Finance. The income statement details revenue, expenses, and net profits over a specific operating period. The balance sheet provides a snapshot of a company's financial state, balancing assets against liabilities and equity. The cash flow statement tracks the physical movement of cash in and out of the business across operating, investing, and financing activities. Subscribe to Aduco Global to master financial analysis. When equity markets experience sharp declines, this specific index typically spikes, tracking market anxiety. What is the VIX, and how does it quantify market volatility? Category: Markets. The CBOE Volatility Index, or VIX, measures the stock market's expectation of 30-day volatility implied by S&P 500 index options. It is widely referred to as the market's fear gauge because it reflects institutional investor sentiment. A high VIX reading indicates elevated market fear and uncertainty, while a low reading suggests market stability and complacency. Save this short to understand market sentiment indicators. Commercial banks do not hold all of your deposited cash in their vaults at the same time. What is fractional reserve banking, and how does it generate money supply? Category: Banking. Fractional reserve banking is a system where banks accept deposits, keep a small fraction as a reserve, and lend out the remainder. The reserve requirement ratio is set by the central bank to ensure liquidity for normal daily withdrawals. By lending out the remaining funds, banks create new credit, effectively expanding the total money supply in the economy. Follow Aduco Global to understand the hidden mechanisms of banking systems. Mitigating investment risk does not require predicting the future. It requires strategic asset distribution. What is diversification and why is it considered a foundational investment rule? Category: Investing. Diversification is the risk management practice of allocating investment capital across different financial instruments, industries, and asset classes. The primary objective is to minimize the negative performance of any single asset on the overall portfolio. A well-diversified portfolio mixes uncorrelated assets, such as domestic equities, international bonds, real estate, and cash. Hit that subscribe button for structured financial education. High inflation is usually a sign of a booming economy, But when it pairs with low growth, it creates a severe crisis. What is stagflation and why is it so difficult for central banks to resolve? Category Macro. Stagflation is an economic anomaly characterized by slow economic growth, high unemployment, and high inflation. It breaks traditional economic models which suggest inflation should drop when unemployment is high. It traps central banks because raising interest rates to fight inflation slows down growth even further, while lowering interest rates to stimulate growth worsens inflation. Subscribe to Educo Global for daily macroeconomic insights. Comparing the net profits of two companies can be misleading due to differences in taxes, debts, and local laws. What is EBITDA and how does it help analysts measure core profitability? Category Finance. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It isolates a company's operational performance by stripping away non-operating factors, financing costs, and accounting decisions. This metric allows investors to focus purely on the cash-generating power of the core business. Save this short for your next corporate finance project. Finding a guaranteed profit in financial markets sounds impossible, but a specific mechanical trading strategy does exactly that. What is arbitrage, and how does it exploit temporary market inefficiencies? Category Markets. Arbitrage is the simultaneous purchase and sale of an identical asset in different markets to profit from a price discrepancy. For example, if a stock trades for $10 on the New York Stock Exchange and $10.05 on the London Stock Exchange, an arbitrager buys it in New York and sells it in London instantly. Because the buy and sell orders happen almost simultaneously, the trade carries virtually no market risk. Follow Educo Global for advanced trading concepts made simple. Managing a modern nation's economy requires two distinct hands that operate completely independently of one another. What is the difference between fiscal policy and monetary policy? Category Banking. Monetary policy is controlled by central banks and involves adjusting interest rates and controlling the nation's money supply. Fiscal policy is controlled by the federal government and involves setting tax rates and allocating government spending. Monetary policy influences the broad availability of credit, while fiscal policy targets specific public infrastructure, programs, and social sectors. Share this video with someone studying political science or economics. Equity investors typically categorize public corporations into two fundamentally different strategic groups. What is the difference between growth stocks and value stocks? Category Investing. Growth stocks are companies expected to grow their revenue and earnings significantly faster than the market average, often trading at high P/E ratios and paying no dividends. Value stocks are mature, established companies currently trading for less than their intrinsic financial worth, often offering steady earnings and consistent dividend yields. Growth stocks rely on aggressive future price appreciation, while value stocks rely on price correction and immediate cash flow. Drop a comment. Are you currently heavily weighted in growth or value?